Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and with me I have a very special guest joining in. Miraj Vora joins in from IDBI Capital, and all we are going to do is discuss about the stock markets, investing strategies, the way you need to protect your capital and maximize your returns in this week. Welcome, Miraj, and good morning to you. Thank you very much for taking the time out. Let me first of all, update all our viewers about the market opening today, and then we can go on about our discussion as well. Well, another week has started, but on a very, very weak note. The Sensex crashed almost 700 points right at the opening trade today, and the Nifty also breached the 7,000 level on the lower side in today's opening action as well. You are seeing a broad-based sell-off with all the sectors down in the red, especially the realty index are dropping about over 2% in today's trade. In terms of stocks, you have ICICI Bank, Power Grid, NTPC still holding up into the green, but most of the stocks on the Nifty 50 pack are also down in the green, including the stocks like Britannia, Apollo Hospitals, HUL, BPCL, IndusInd Bank, all the top losers of the Nifty pack at the moment. Of course, let me just quantify for you how the Sensex opened in trade: 1.2% down, 710 points downward direction, and 56,486. That was the opening level for the Sensex. The Nifty also slipped over 225 odd points, or 1.3% lower in opening trade, and we're trading at 16,945. Let's look at what the experts are looking at this kind of an opening action. Miraj, the opening has been very, very weak, of course, because of the global cues, which have been indicating some weakness as well. How are you looking at the trade today, and is there more downside?
Yeah, good morning, Sakshi, and good morning, all the viewers. So, what we are seeing is that, if we look at overall Nifty, then we have been, choppy in the last 5 to 6 trading sessions where, a lot of gaps have already been created, which indicates that, it's an indecisive market. Yeah. But if we just increase the time frame a little bit and move to the monthly charts for Nifty, then from April 2020, we have been seeing that, we have been a one-way up move for 2 years. And now for next 3-4 months of consolidation in this range where, 16,500, 16,800 on the lower end would be a very strong buying zone, while as we are seeing some supply zones at around 18,000. So in that broader range is what we expect markets to consolidate, where, stock or sector specific pockets may see some outperformances. But major underperformance has come from Bank Nifty on since 19th of April, it breached its 200-day moving average, and after that, it has not been able to either surpass the 200-day moving average or even the high which made on 19th of April. So that is one sector which we feel that would be underperforming significantly going forward also.
Okay, so what is the kind of strategy you're recommending on the Nifty Bank and Nifty, both the major indices?
For Nifty, it would be, buy at around 16,800, 16,900 levels. Bank Nifty, we would be saying sell on rise where, until unless it does not go beyond its 200 moving average.
Okay, sell on rise on the Bank Nifty. The Nifty still has a buy trade at the lower levels at the moment as well. Let me quickly talk about some of the stocks that are in news, and we'll take the recommendation on those stocks also from Miraj. ICICI Bank reported its earnings post the market hours on Friday. On Saturday, those numbers came out with the profits beating the estimates by a wide margin, coming over 7,018 odd crores. NII was strong as well. The gross NPAs and the net NPAs, showed some kind of an improvement. So the asset quality improved, and the profits are definitely estimates as well. How are you looking at ICICI Bank? It is already trading up in a subdued market after the earnings. So your recommendation on the stock?
ICICI Bank has been one banking stock around the entire banking pack, which has shown, either a consolidative kind of a trend or an uptrend. So currently 770 is a major hurdle for this bank. Until unless it does not go above that, a fresh long trade would not be recommended. Maybe if it comes down back to around 745, 740 levels, there you can initiate a long where, you might have an 10 to 15 points of a stop loss on the lower end. And then again, the higher end range stands at 770. Beyond 770, we may see it getting into a fresher range. So that is the current range for ICICI Bank.
Okay, understood that. Apart from this, we also had Tata Metallics that reported its earnings as well. Revenues rose about 22.25%. However, EBITDA definitely slipped by 60% right there. So the problem happened on the bottom line front rather than the top line. From this space of mid caps, Tata Metallics, how are you looking at this space?
Tata Metallic, still there is a lot of weakness seen today. There is a gap down because of the results, and it may correct till around 760 levels. There it might be a little bit comfort to watch out if there is any reversal. But unless we don't hit 760 and see any reversals in the trade, I would better avoid the stock.
Okay, avoid Tata Metallics at this point in time. Two more stocks and then we'll go to your stock recommendations, sir. One is Reliance Industries. Of course, the stock has come back into news after the company has said that it is abandoning the plan to buy Future Group's retail assets now after a long battle. How do you see this augur for Reliance Industries and the stock going forward? Of course, after the, in the last week, we have actually seen a very, very strong performance from Reliance Industries. Many brokerage houses also gave upwards of 3,000 rupees kind of a target price for Reliance Industries. After this news, how are you looking at the stock and the technical charts? What are they indicating?
So technical charts are already indicating that this news has already been priced in. What rally we had seen from 2500 to 2800, a possibility of an profit booking or retracement till 2700. But in no manners we are saying that it's an sell. It is buy on any dips you get on Reliance. 3,000 would be a very short-term trading target. We even see it going beyond 3,300, 3,400 if you hold this stock for at least a year's perspective. So very positive on Reliance. Any dips you get into this stock would be a great buying opportunity.
Okay, any tips on Reliance Industries could be used to buy the stock. It can actually show you 3,400 kind of levels also in a year span. So keep that stock in your radar as well. HDFC Bank, this stock has been a very big laggard from the time we saw the announcement of the merger came in. Of course, after that 1 day's up move, the stock has been slipping downwards. Today, the news has come in that the lenders board has approved a dividend of 15.5 rupees per share, and that is weeks after the approval merger with the HDFC Limited. How are you looking at both these stocks, HDFC and HDFC Bank, now that the merger will happen in some time? How are you advising traders and investors to look at this space?
At a current juncture, HDFC Bank is one of the biggest laggard for Bank Nifty not performing, and it may continue to do so for going forward also. 1,300 is an important level for HDFC Bank. If that breaches, then on a monthly chart, it gives a breakdown. So currently, if there is any up move in HDFC Bank, I will utilize to lighten my positions. And comparatively in HDFC Limited, if we see, then it is 2,000 as a very strong support for that. So currently on any rally which we say, because the intermediate highs which it made on the announcement of the merger might stay as the highs for at least a considerable period of time. So any up move in these two twins, I would utilize to exit it. Maybe at around 1,800 for HDFC Limited and around 1,200, we may consider it as a value buy.
Okay, understood that. Let's move on to understanding your stock specific recommendations for the day, sir. It's going to be a very, very volatile day, perhaps yet again for us in today's trading session. We've already seen a sharp gap down opening today. Any specific stocks that you're looking at a buy trade also in this kind of a down market?
See, in this kind of a down market, cement is one space which is still buzzing, and ACC, Ambuja, both are showing very strong momentum. Ambuja, which is looking very strong at around 380 odd levels, one can buy this with 375 as a stop loss and target for around 400 for this on the immediate terms. And on the auto space, mainly on the two-wheelers, Hero Moto is looking very strong. It has been showing consistent up moves. Today also it is breaching its previous days highs. On a trading perspective at around 2330, Hero Moto could be a buy with 2265 as a stop loss and 2450 as an immediate target.
Okay, understood. So the cement pack and the two-wheeler pack, those two spaces will be interesting to watch out for, and the specific stocks that Mr. Vora has also indicated to all the traders who want some trading picks in this down market as well. Any disclosures from your side on these stocks that we have discussed?
On these stocks, I don't have any personal holdings, but yes, we would have recommended these stocks to clients.
Okay, understood that. So again, today's day is going to be very important in terms of earnings as well. We have a whole lot of companies from the mid-caps basket: Century Textiles, Everready Industries, Gujarat Mineral Development, Mahindra CIE, Tatva Chintan Pharma, Tata Investment and Steel Exchange, also Meghmani Finechem reporting their earnings today. So it may be yet another day when we will have a lot of stock-specific moves in today's trading action as well. Many, many thanks, Mr. Vora, for sharing your stock recommendations and the insights on markets with all our viewers.